going to talk about something today that's a little bit different than what you're seeing around here at this Resource Investor Summit, but we're going to talk about a hidden investment in the world's best asset class. Now, there's one asset that has greatly outperformed every other asset class, so maybe some of you guys are already guessing what we're going to be talking about, or maybe you know who I am and so you know what I'm going to be talking about. We're going to talk about hidden investments in this asset class that maybe you haven't seen or haven't really thought about, so we're going to talk about that. Okay, so first, to kind of set this up, we have to understand that technology moves in about 50-year cycles. So we can see about every 50 years, there's a new technological revolution that changes a paradigm. It changes the way that we work, interact, the world works. But more importantly for us, because we're at an investor conference, it drives financial markets. It makes people really rich if you catch it really early. So about every 50 years, we see a new technological revolution change. And if you catch it early, there's a chance to make a lot of money. Now, we can go through these pretty quickly, but we know there was the Industrial Revolution, there was steam engines and railways, there was electricity and steel, heavy equipment, there was oil, automobiles, mass production, there was microchips, which brought personal computers, telecommunications. And so what drove the market for the last 50 years? Internet, telecom. What drove before that? Ford, GM, GE. What drove before that? For oil, steel, right? And so these guys, a bunch of old dudes, and one guy over there on the right you might recognize, all made their wealth through these technology cycles. So we got John Rockefeller, of course you guys know that name, in the oil industry, the robber barons, if you will. Vanderbilt, another technological revolution, railways, built his wealth through railways, steel. Andrew Carnegie, of course, the steel magnate, built his wealth there. JP Morgan Chase, not Jamie Dimon, this is the founder of JP Morgan, there through the banking industry. Henry Ford, automobiles, and of course Bezos, more in the information age. And so each one of these titans of industry got enormously wealthy. But it wasn't because of the individual asset. It was about the technology that was unleashed and unlocked because of the asset itself. And that's what we want to talk about today, because most people are missing what's really going on and what the real potential is by looking at one asset, maybe thinking a little bit too small, because it's hard for us as humans to understand the future. So let me show you how this works. Technology has always been the fuel of the capitalist system. Capitalist system being, I have private property, I want to learn how to use it more efficiently. My money and my time is a scarce, limited resource, and so I want to be able to use that. It's what fuels the system. And right now, we have a brand new technological revolution that's been started, and this time, it's a decentralized revolution. Centralization is like a pendulum that swings back and forth, and we've gone to centralization, and now the pendulum is swinging back to decentralization, and we finally have a technology that helps us unlock that. And of course, Bitcoin is that technology. We can talk about cryptocurrencies in general, but really it's Bitcoin that is the decentralized technology that's unlocking this, and this is what we're going to talk about in this presentation. But it's not just Bitcoin. Now, we can talk about it, like I said, in the world's best performing asset class, and I can cherry pick data all day long to show you why it's the best performing asset class, but what we do know is Goldman Sachs said it's been the best performing asset class this year. Cool, year to date, that's been about 3 weeks. It's not a whole lot. Okay, well, what about for the last year? Yeah, it's up 150%. It's outperformed every asset in the last year. Okay, what about since the pandemic? It's up 850% since then. Okay, what about in the last 12 years? Oh, it's up 20,000% since then. It's averaged a 230% compounded annual growth rate. There's no other asset class in the world that's even come close to this. But we're not here to talk about Bitcoin. We're here to talk about the hidden investments in this asset class. So let's talk about that. If you think about commodities and an asset, and then you think about the industry around that. So to put this into some context, we're at a Resource Investor Summit. You guys can think about this. Oil is a commodity. The definition of a commodity being something that comes from the ground. Anybody can go get it. No matter where you get it in the world, it's fungible, and there's no common issuer. So anyone can go get a piece of dirt and potentially dig up oil, uranium, copper, whatever, right? And no matter whether I get it in China or I get it in Mexico or I get it in the United States or here in Canada, no matter where I get it, it's fungible. Gold's gold, uranium's uranium, right? And there was no common issuer. It's in the earth. So oil is the commodity, but think about that. The oil being the commodity, but then think about the industry that was built up around oil. Think about all the opportunities that are there as entrepreneurs and as investors to make money in the oil industry. You see, Rockefeller in the oil industry, Vanderbilt, all the titans that I showed you before, didn't just make money because they bought the asset and sat on it. They made their wealth and became the richest men in the world by building up the industries around the assets. So when you think about oil, sure, go buy oil. Go buy a barrel and stick it in your backyard. Buy an ETF, buy a future, whatever you want. But what about the oil pipelines? What about the tankers? What about the company that makes the sonar that goes on the ship for the oil tanker? What about the new software that helps them find oil in the oil fields? What about the pressurized system that gets the oil out of the ground? What about the drill head that allows them to now drill horizontally? You see, there's an entire industry built around oil, not just the asset itself. And as I'm showing you, the oil, the asset is less than the industry. Here, we're at a gold conference. Let's talk about gold for a minute. Think about gold. We have gold, the asset. You guys own gold? Some of you guys own it? A few of you? Not very many. We're at a gold conference. It's kind of weird. But then we have a gold industry. So you can go walk around and look at all these exhibitors out here. We have people getting gold out of the ground. We have people processing gold. We use gold for electronics. We use gold for all these things. There's industry built around it. And just like the oil industry, the industry of gold is much bigger than gold, the asset. And we can think about Bitcoin the exact same way. So we certainly have Bitcoin, the asset, which has been the best performing asset in history over any time frame. Now, sure, we could choose 6 months here or there if you want to really cherry pick data. But for the most part, it's been the best performing asset. But just like oil, just like gold, and just like every other asset, it's the industry that's being built around it that has even more potential for us. And this is the hidden investment opportunities that I want to talk about. Because most people think about Bitcoin as something simple as it's just money. But even money itself has built the financial system, which is actually the single largest industry in the world. We'll talk about that in a second. All right, so now that we've established this, we have an asset, a commodity asset, and then we have the industry around the asset. Does that make sense so far? Can I get a yes? Something? You guys hear me? Okay. So let's break this down. How do we invest in this as investors? We're at a Resource Investor Summit or conference. So think about investing in gold or any precious metals, and you can think about investing in Bitcoin sort of the same way. So first layer, you should certainly be holding the physical asset. You might want to buy gold miners. I like gold miners. They work pretty good. However, I like to hold physical gold as well. So you want to start by owning physical Bitcoin as well. Buy some Bitcoin, put it in your portfolio. All right, that's layer one. Buy and hold the asset. But then, sort of similar to this investing conference that we're in, if you think about resource investing, then you have the major asset producers. This would be like a VRIC Gold, for example, right? So these are the major producers. In the Bitcoin space, we have those as well. These would be the publicly traded miners. They're producing the Bitcoin, the asset. Now, a lot of them are publicly traded. Some of them are privately traded. Right now, they've been very volatile, much more volatile than gold, typically moving on like a 3 to 5 times ratio. So there's a lot of alpha to be made in these publicly traded ones. You can trade them right through your stock account. Like I said, there's also private investments. And there's lots of industry being built around that. Who's making the switches, the racks, the coolers for the mining industry itself? Think about all the plays that are there. Then we have the junior asset producer. So in the gold industry, you have the majors, the VRICs. Then you have the junior asset producers. These are at a much more earlier stage, obviously higher risk, higher reward. And these would be more like the private Bitcoin miners that you could do. But as well, not just miners. Also, I would also put a lot of the payment service providers, the people that are making the apps, the switches, the servers, the warehouses, the data centers, the software, things like that. You can put them in there. And then we have like the explorers, or I would, in the Bitcoin sense, I would call these like more like the venture stage investments. And so these are the ones that are working on new pieces of technology to fit into the Bitcoin industry, or I'd say the Bitcoin ecosystem. This is layer 2, layer 3 technologies, new custody solutions, new ways to send data or information over the Bitcoin network, new ways to use it, new types of technology, things like that. And those would be more early stage, much higher risk, and also much higher reward. So because we're at a resource investor conference, if I'm a gold investor, this is how I'm thinking about my portfolio, from holding my physical gold, some major producers, some minor producers, and a couple of explorers for some extra alpha. And if I'm thinking about my Bitcoin management as well, I would also think about the same way. Certainly, you should be holding physical Bitcoin, but you also want to be investing through the industry because you're going to get extra alpha on top of holding the asset itself. Now, again, back to the best performing asset of all time, getting extra alpha on top of a 230% compounded annual growth rate sounds pretty good. You guys like that? All right. So this is sort of the way that I look at the ecosystem itself, and this unlocks, at this point, I don't know, I don't have an exact number, but thousands and thousands of opportunities are already there. Where are they? Well, what we can see right now is Bitcoin, the industry, is disrupting lots of markets. It's disrupting energy markets as we know it. Right now, it has completely changed the way that the grid runs down in Texas, for example. So now Bitcoin miners operate as sort of like a battery, and they suck up the extra capacity. And right now, a week ago, Texas went through a major freeze, and they needed that extra energy, so the Bitcoin miners shut off. Then they're able to transfer that power back to the grid in the time that they need it. This is revolutionizing the entire power industry and really the electrical grid system as we know it. And this is creating massive opportunities for entrepreneurs, investors as well. We need new switches. We need new software to manage and regulate this. We need all types of new energy systems. So now we're seeing small modular reactors being spun up to work on these and all types of things like that in the energy markets, equipment, software, things like that. Then we have in the banking and payment sector. And so now you think about it sort of being outside the banking system, but now it's starting to get inside the banking system. There's a company called Lightspark that is using the Bitcoin network, not the asset, but the Bitcoin network to actually move fiat currencies. So now I could send somebody in Mexico dollars, they could receive them in pesos. The transaction went across the Bitcoin network instead of SWIFT. The benefit is that it happens in seconds instead of days or weeks, and it happens for a fraction of a penny instead of $30 to $50. So now it's actually disrupting the fiat payment system as we know it. So inside of banking and payments, there's a massive amount of industry inventions that will be there for investors and for entrepreneurs that we can disrupt. Inside stores of value, creator economies, I could go on. In the creator economy, so there's all types of ways now we can do peer-to-peer communications, transactions, payments. We're starting to see the rise of something that is sort of revolutionizing the world of content as we know it, which is allowing creators to go peer-to-peer, what we call value to value, directly to the end user. You know, a lot of content creators sort of get captured by their sponsors, if you will. If Pfizer is my main sponsor, I have a hard time talking out against Pfizer. You guys have seen that, right? And so when I, as a creator, have to take on sponsors, I have to be careful what I say. But if I'm able to go directly to my listeners through content, which the internet enables, but now they could pay me directly back peer-to-peer through Bitcoin, now I'm only doing the best I can for my listeners. And this is happening right now. There's several new technologies that are already there that are allowing podcasters and video content creators to go directly to their to the recipients of their data and get paid back directly. And as a matter of fact, just like you can stream content down, if you're streaming a video or a podcast audio, you can actually stream money back. It's changing everything that we know it. We have stores of value, new ways to store money. So these are some of the industries. If I wanted to put this into a graphical format, you can see how big this has actually gotten. This is only a small percentage of the amount of companies broken down by category, broken down by like wallets and exchanges, infrastructure projects, gaming projects. I mean, you name it, they're all broken down. There's too many to list there. But this industry is growing really, really fast. It's returning returns multiple times on top of the returns that Bitcoin has already been receiving. And it's starting to change the way that we think about even our unit of account. You see, what is our measuring stick? You're going to hear people at this conference talk about the dollar. Andy Sheckman, a friend of mine, was up here earlier talking about the death of the dollar and the rise of the BRICS and gold's taking over. And you're going to hear someone else say the opposite. No, the dollar is going to be the strongest, going to suck up the liquidity of everything else. All the other currencies are going to fall to the dollar. But what is the dollar falling against? And so you have to start to think about the assets themselves and what are you using as your measuring stick. And so the benefit of these companies is that you can earn in Bitcoin. You can change your unit of account. And that's what, like I said, gives you the alpha on top of just holding the asset itself. Now, where are we in this cycle? You guys are gold bugs. Maybe. I don't know. Actually, maybe not. We're here sort of at an investing conference, but most of you guys don't own gold. So maybe you're not gold bugs. But think about this from a long-term perspective. If you're in the gold space, you know that you've been waiting since about 2011 for gold to sort of kind of get back to where it was. It took over a decade for gold just to get back to its previous all-time high. It's a long time. Anybody like waiting for a decade? Not really. Have you everybody heard that Bitcoin's too volatile, right? Is it too volatile? You guys heard that? It's too volatile? No one's heard that? There hasn't been more than a 3-year period where Bitcoin has been down from its all-time high. So gold was down for 10. Bitcoin was down for 3. So everything moves in cycles. We want volatility. If asset prices never changed, how would we make any money? So we need asset price to go up, but they have to go up and down. Nothing goes up or down in a straight line. And so we're sort of at this stage in a cycle. If we look at this technology, we call it a diffusion of innovation. It's how long it takes for the technology to reach adoption. And as the asset gets bigger, as it gets more adoption, the volatility starts to fall down. And we can see that typically when we look back through all the technological revolutions that we've seen, happening on about a 50-year time frame, they evolve in a similar fashion. And you can see that it takes about a 50-year cycle to reach full deployment before the next technological revolution takes off. And so we're right there. I wouldn't put a red arrow on there for you so you could see. So yes, you've missed the boat, and I hate to tell you that you really missed it. You could have bought Bitcoin for 30 cents, and it's worth 40,000 today. But as you can see from this diffusion of innovation chart, we've barely scratched the surface of where it's going. The old Chinese proverb says the best time to plant a tree was 20 years ago. The second best time is today. And so, yeah, you could have bought at 30 cents or $1 or $5 or $10, but you could also buy it today. And in my opinion, it's a better risk-adjusted entry today than it was at 30 cents, because who knows what the heck it was. I started buying in 2015 at $300. And even then, I didn't even know what it was. Maybe I'll put a couple bucks towards it, right? But here's where we are. We still have plenty of time, but I show you this chart for one purpose, and that's to have the right perspective, the right time perspective. What happens is most people expect way too much, way too soon, but technology takes time to adopt. The internet had been out for 20 years, and less than 10% of people had bought something online. If some of you guys are old enough to remember, in the early 2000s, people were afraid to put their credit card online, which still baffles my mind because you're protected by everything you do with your credit card. If someone charges my credit card up, I can just charge it back. Why were we afraid of that? But it took 20 years, less than 10% of people had done it. It wasn't until 2007, until we got the iPhone, that the internet really started taking off, where it got fast enough and it was common spread. So that was almost 27 years later. So here we are in Bitcoin. We're about 15 years into it. We're just barely getting the surface of it. So you guys are still early. And like I said, we have the asset and we have the industry. Going back to oil for a minute, here's a chart of oil going back quite a ways, but you can see where oil really took off in 1971. Of course, 1971 is when we got off the gold standard and asset prices exploded. But you can see since 1971, it's been very volatile. Just like Bitcoin's very volatile. Oil has been very volatile, but you can see I put that red line there, sort of averaged around an $80 per barrel price. So the price of oil has gotten a little bit more, a little bit less, but sort of somewhere in the $60 to $80 barrel prices is where we find ourselves. That's the asset. What about the industry? Well, the chart on the right shows you the analysis of the oil and gas market size. It's the 8th largest market in the world, worth over $4.6 trillion annually. The industry, not the asset. Oil, the asset's not going up or moving back and forth through a volatile fashion. Meanwhile, the industry is exploding to $4.6 trillion. Now, that's the oil and gas industry. That's the 8th largest industry. The number one industry, do you guys know what that is by market cap? I said it earlier if you guys were paying attention. That's the financial industry. The financial industry is the largest industry, and it's over $22 trillion per year. Now, Bitcoin's coming to disrupt lots of industries. I showed you some of those, the energy industry, for example, but also the banking and the payment industry, the financial industry. Now, the asset, this is a chart from Fidelity. one of the largest asset managers in the United States or the world. This is a chart from Fidelity showing the Bitcoin supply and demand models. And assuming that it follows this model, this sort of projects out where it could go. It doesn't continue to move up in a parabolic fashion like we've seen. Things slow down over time. So you can see that this bell curve starts to flatten out. However, if you chase this down, I know this sounds a little bit crazy, but this puts it out in about a decade from now being worth somewhere over $10 million per coin. This is Fidelity's chart. I didn't make this chart, but my point being is if this is what the asset does, imagine what the industry around it does. That's the real alpha. That's where the opportunities are. Make sure you own your physical Bitcoin for sure, but look for opportunities in the asset. A lot of alpha. More importantly, we're building the world that we want. And I'll end it with that. Happy hunting.